Hi, this is Keith Schneider, CEO of MarketGauge.com, and this is November 6th edition of Market Outlook. So we got an exciting week coming up with the election. It's sure to be volatile either side. Let's take a look at where the market's set up. It's pretty oversold, but obviously things can get more oversold, and you can also develop a very significant bounce from here, and let me show you why. Well, first of all, one of the key features here is you can see we have only 3 accumulation days across the 4 key indices. And look at all the distribution days. So with our 9 days down in a row, we're doing it on excessive volume each day. That's how we record more distribution days. Tells you certainly institutions and the general public liquidating on greater volume on the down days. So that is pretty significant. That's a sell signal in itself. And as you can see, on average, we've got the market down about 2% or more in our key indices. And year to date, barely hanging on to a positive return. Okay, so let's take a look at what the sectors are telling us. And as you know, what we like to see is uniformity with all the independent sectors in the market, and we are not getting that. We are definitely getting some important breakdown. So let's take a look and see what I'm talking about here. This particular table, very informative. What it is you can see the number of sectors with a positive 6-month return have dropped, and it's barely hanging on. We're sitting here at around 5 or 6. If we lose a couple more sectors, then we're going to end up with a sell signal, and it would be mostly coincide with a drop under the screen here, which is the 200-day moving average. Now, there's a couple of interesting bright spots, or at least one that I can see, which is that, as you can see, we have one sector that was actually up on the week, and that was transportation. Let me move this around so you can see the table here. So we did have some improvement. Transportation actually moved into a bullish phase. So that helped a little bit. But look, you've got pretty much uniformity here. Industrials, materials, utilities, consumer staples, and it goes on, all with a negative 6-month return. That's not good. And sitting right at that 200-day moving average for the index. So we drop off more. You would get a confirmed sell signal based on this simple system, which is how many sectors are up over the last 6 months, and are we above or beneath the 200-day moving average. So a lot of it depends on what happens with the election, but there you have it. The internals, as you can see, from volume to the sectors here, definitely weakening. Another point to remember is that semiconductors, which had been our strongest sector, which was actually a positive sign, actually really lost quite a bit, and we are back into a warning phase. So not really good when your leading sector or leading sectors move from bullish to warning. Not a good sign either. So when I look at this particular table, I see additional negative action. Let's take a look at market hotspots and see what that's telling us. Well, a couple of things. You can see metal and metal mining, which includes copper and industrial metals, a little bit of gold and silver in there. That was our strongest sector this week. That and gold miners, which is sort of a subset of it. So what's interesting is that copper was one of the leading metals in this metal and mining group, which is interesting because that is usually associated with increasing economic activity. So you got a situation where the market is obviously reacting to the election, what appears to be a growing economy, and you got copper moving forward. On the other hand, other commodities like coffee also doing well. So commodities in general seem to be holding its own or gathering strength while the market overall deteriorates. And as you can see also, normally what had been leading, the semiconductors here, right, down 1.6% for the week. Not a great performance, and basically confirming that warning phase. All right, so those are the highlights from biggest gainers and losers. That's what you can see from this table here. And again, just want to emphasize coffee up 40% over the last 6 months, putting in a good week, and that's part of our commodity index that's looking pretty positive. All right, so now let's take a look at the market internals, and what you can see setting up here is you've got a situation where meaningful rallies start from the levels right here, which is fairly oversold in both the S&P and the NASDAQ. So as you can see, our short-term 5-day up-down volume ratio just hitting the level where it starts getting oversold. However, the McClellan deeply oversold, about the most oversold it's been in about a year or so, or since the beginning of the year. And the same thing with advanced declines, that breadth is really falling apart as well. So we start hooking around here, which is actually what we started to do, believe it or not, on Friday. You could get a meaningful rally. So the problem, of course, will be if it's a Clinton win, I would expect a significant gap to the upside. So that might be tricky to play, and you're going to have to be pretty adroit at risk management depending on the size of the gap. So oversold, obviously market has sold off based on renewed Trump strength in the polls. So you got a scenario here where it looks like if you get a Trump win, you could get more of a significant sell-off, a break of the 200-day moving average. Remember, I'm not trying to be political here, just stating the facts. Markets hate uncertainty. Trump is unproven as a politician and a serious leader. I think that would definitely spook the markets. On the other hand, deeply oversold condition now in the market, and a Clinton win could definitely work out in a way with a gap up to the upside, and then we'll have to see just how far we can get if indeed the Clinton wins. So that's the scenario right here. So it's interesting that we're in a pretty deeply oversold scenario. We have virtually the exact same setup in the composite, the NASDAQ, the big NASDAQ index. So I'm not going to get into any more detail there, but you got a confirming situation in S&P and in the NASDAQ as well. So expect the same type of reaction right after the election. All right, let's take a look at a couple more indicators. As you can see here, new highs, new lows. What's interesting is the indices, which are cap weighted, and Apple has overall been doing really, really well, masked the fundamental decline that was occurring. As you know, we're highlighting that over the last couple of weeks that we were just sitting under what was considered bullish territory. So that's sort of a negative, and you really, over the last week or so, really fell apart. So the new highs, nothing making new highs, only stuff making new 52-week lows, and hence this ratio really falling apart. And the discrepancy here between the breadth of the market really not confirming the number of issues up versus down, this new high, new low, was being masked by the big caps and a few big leaders like the FANG stocks as well, leading the rally, masking this deterioration here. So if we look at the NASDAQ 100, it's even a bit worse. We're almost getting to the point of it really being in super oversold condition, where new highs, new lows start falling beneath that 30% level, and that's pretty negative territory. So first, right, we fell apart. You can see dramatic difference. Let me highlight how to use this, because this is sometimes a really fabulous tool. And this is why we were sort of negative. Look, you hit new highs up here, sort of sold off, recovered. We stayed above this 70% level here. But once we fell down, we actually ended up making a new high, but really non-confirmed, and then just fell apart as the market hit the new high, and that was it. Couldn't follow through, and this was a pretty good lead indicator, which is not usual for this particular one, but this particular indicator. But it does work that way occasionally, and it's important to take notice. So when we failed beneath that 70% level, it was well before the market actually took out its 50-day moving average, which is this line right here. So interesting the way this market has been unfolding. Okay, let's take a look at a couple more market internals. One thing you can say here, and this is confirms what I was talking about earlier. This is the VIX, and as you can see on that 9-day sell-off, VIX has really hit its highest levels since Brexit. Now we're on the outside of the Bollinger Band, so we're definitely in frothy territory. So back down, back into the Bollinger Band and into the more normal trading range would be a negation of what I would call the sell signal that was generated as we moved back above the 50, above the 200-day, and outside of the Bollinger Band where we are now. So market is definitely showing signs of pessimism, deep fear, pretty high panic, and there you have it right there. So could we continue to move higher? Absolutely, yeah, absolutely. We're going to let these signals tell us what they're going to do, and then react accordingly. So right now, again, another indicator indicating pretty high level of pessimism. Will this be a new trend continuing up? Let the market tell us, and I think a lot will be determined by the outcome of the election. Okay, let's take a look at the volatility spread between short-term and longer-term volatility, 1 and 3 month. And again, you can see everything trending down. We're starting to reach levels that are pretty pessimistic. Again, right after Brexit, it was pretty bearish, and then of course moved back up. But meanwhile, this trend and the momentum all to the downside. The best you can say is that we just sort of paused on Friday, hence we got the sideways, not quite a hook up, but sideways. So I'm looking at this and saying more potential on the downside, but overdone. So this is a level consistent with the other indicators, sentiment, market internals, overall running together, which is not surprising. So again, hook back up. You could generate a significant rally. This is where they come from. Look at this here. That was Brexit, and you had a huge move. You had about a 7-8% move or more right after Brexit, and that probably could coincide with a similar type of scenario with the election. All right, I think that pretty much sums it up. You gotta you gotta basically wait here for the election results and see how that plays out. And again, it's going to be tricky depending on the size of the gap. Again, if there's a Trump win, I think it could create a short-term panic. We already can see 9 days in a row. This is highly unusual action before an election. On the other hand, a Clinton win, at least temporarily, could cause a scenario of big gap up to the upside, alleviate the concerns that the market is showing on this decline, and continue further or fail. So overall, the position of the market had been sort of deteriorating overall, certainly when looking at some of our other indicators. So who knows how long a Clinton type rally could last. All right, that's it for now. Stay frosty. Certainly interesting times. If you have any questions, please feel free to email us, and let's stay tuned.